Right. Ladies and gentlemen, good morning, and you are welcome to lecture two of our management accounting lecture series. And this lecture, we are going to look at cost classification or classification of cost. All right, classification of cost. The first lecture, we looked at the introduction of man accounting, and we actually talked about some branches of the whole accounting thing, and we learned about management accounting. We learned about cost accounting also. All right, and we also learned about financial accounting. And so we want to begin with cost. I mean, we want to talk about the whole concept of cost. All right, and this lecture is going to span four angles. All right, so we are going to talk about the concept of cost. What is cost? The concept of cost. When we talk about cost, what is cost? Then if we get to know what cost is, we are now going to classify cost. So we will do cost classification. Classification. Then in our study of the cost classification, you realize somewhere that some costs are mixed up within themselves and we will have to separate them. So we will be learning how to separate cost. So separation of cost. And the strategy we will use to separate cost here will be the high-low method. High-low method. All right. So we will use that. Then we will end the lecture with how to do codification of cost. So you will learn something about coding. All right. So our second lecture is going to take care of these four areas. Bear in mind that this lecture series that I do for management accounting is good for those in Ghana doing introduction to management accounting, and which is a paper in the ICAG Institute of Chartered Accountancy Level 1 paper. So you can use the same video for it. At the same time, this video is also useful for management accounting, a Level 2 paper in Ghana. All right. The same thing in Nigeria, right? Tanzania, ACCA, ICAE, England, and Wales. All right. So you could use the same thing. And also, it is also good for performance measurement. So those, if you are at the university level, I think that will be a level 3 course. You will do management accounting. And if you are at the master's level, you'll be doing something called managerial accounting and all those things, or performance management. So these are the same thing. So let's start with understanding cost. So what is cost? When we talk of cost, what is cost? What is cost? So we need to understand what cost is all about. So we are taking a look at the concept of cost. Now, when you hear cost, what does it mean to you? What does cost mean to you? Now, it's a terminology and we want to define it. Now, we are looking at the value that you place on goods and services. All right. So the goods and services that are produced and that are also consumed. So when we talk about cost, we can take cost as the value. All right, of goods and services consumed. All right, by customers or consumers. All right, or that same cost that is incurred in producing. All right, so the value of goods and services produced by producers. So how much value do we place on what we have produced? All right, and how much value? Because the value I put on what I've produced is what you are buying it for, and that is the cost. But cost doesn't mean only that. You know, sometimes you go through life and something will happen to you and you say, this one there, it cost me pound, it cost me, like it cost me, it cost me. Meaning that you did something And because you did that thing, you have suffered for doing that thing. That is it. Even if you take money to buy, let's say, something, we say it cost you something. What did it cost you? What actually cost you? It's the sacrifice you made. It pinched you. So cost is also a foregone alternative. The value of a foregone alternative. And later on, you realize that the technical name for a foregone alternative is what? Opportunity cost. So you miss that opportunity to do something else, and that is that. So cost is not only the value you place on something that you consume, it is also the value you place on something that you sacrifice. So the foregone or the sacrificed one, the sacrificed alternative. It's also the value that you place on such. All right. So basically, that is that. So that is the concept of cost you must understand, because very soon we'll be learning something called relevant cost, those things that are so relevant to the business. So you realize that it's not just about what you pay for something, it's also about what you missed, all right, the opportunity cost. All right, so that is what we mean by cost. All right, and so in our journey, we will be getting to know some concepts, all right, or some terminologies of cost. So let's learn some terminologies, all right, under the concept of cost. So you will hear a term like a cost object. Cost object. Now, the word object is coming from the word objective. All right, so what you see here is that we are looking at all the values you placed on the things that will help you to arrive at that objective. So basically, that we are talking about. So the cost object is the item for which a cost is measured. So that is it. The purpose for which a cost is measured. So if it can be a product, because if a producer wants to produce a laptop, you'll be buying some one or two things, softwares and all those things, put it together and generate a laptop. So the cost object is the laptop. You can see that. So it is therefore the item for which a cost is measured. An item for which cost is measured. All right. So you said you spent something. What did you spend it on? So if I have my pen here, you see it is an object. So if I bought it, it is something for which the cost is measured. So those of you who do financial reporting, when we talk about a cost, you see that it includes the purchase price and other stuff. But what did you purchase? That thing you purchase is what you are applying the relevant cost to. So an item for which cost is measured. Is that okay? So it can be an item, and by item, we mean that it can be a product. It can also be a project. All right. So the reason why you spent the money, what was that? What exactly was that? So it can be that. It can also be a service. So look at it carefully. When we talk about a cost object, the object is coming from the word objective. Why I spent the money? Why? So the product line, the reason why you spend the money. So and it is that thing that you can actually measure the cost of. So you see in FI we said that something for which the cost can be measured reliably. So if that thing you can measure the cost, that is the object. All right, you can measure the cost. All right. So that is that. The second terminology we need to understand, because we'll be using this thing gradually in our class, is a cost unit. A cost unit. All right. So you can even add a customer order to this, right? Because if a customer places an order, that is what you are going to do for the customer. So you are doing what the customer is wanting you to do. As like I added the service, a department too is that if you spent money because of a department, then that's the cost object. Now, what then is a cost unit? What then is a cost unit? Now, when we talk of a cost unit, we are talking about the basic unit of an output. So this thing that we are talking about, so the basic unit, the very smallest unit of an object, let's say it like that. The smallest unit or the basic component. The basic component. All right, so that is that. So if I had an objective, so the basic component of an object, or the basic component of, let's say, you can use words like an output. Okay, you can use words like an output, the basic component of an output. All right, so that is that, for which you determine a cost for. All right, for which a cost is calculated. And I'm going to give you an example for which cost is computed. So let's say our cost object was a product. Let's say it is a product. And what product is that? Let's say it is a car. All right. So we can measure the cost of the car. But what are the cost units? So you see, when you are producing a car, or when you are using a car, or let's say you are producing a car, you see that you need to build up the car. So the aluminum content that you have to bring in, and the person who did it, and some of the expenses you did to do the seat in the car. So when we talk about a cost unit, so it includes, let's say 10 kg of, what did you buy? So aluminum something. All right. So if it is 10 kg, how much did one cost? One unit, the smallest unit of it. How much did one cost? So these things include something like you are saying that 1 liter of, let's say, petroleum you use to test the car. All right. So basically that is that. If you are producing bread, what was the kg of flour? All right. Kilogram of flour that you use. So one of them, just one. All right, one. The smallest, and one is the smallest of something. So just one. All right, how much you are going to spend on one to be able to produce the thing. Number 3, what is a cost center? What is a cost center? So a cost center therefore includes a department. So we are looking at a department, we are looking at a location, we are looking at a unit, all right, where cost is incurred, not where revenue is earned. The part of your business that is only meant for cost, like all that you do is you spend, all right? So those parts of an entity where cost is incurred, all right, where cost, but not revenue, is incurred. So these are parasites. You only spent on them. All right. So those of you who are in relationship and your partners are cost units or cost centers, I mean, it means that all you do is you spend. Nothing comes out. They are cost centers. You call them parasites. All right. They don't bring in any revenue at all. So therefore, we have revenue centers. May your relationship be a revenue-centered one. In fact, and even move on to an investment-centered. All right. So revenue center. So for revenue center, it is also a department, a location, all right, a unit. But this one, not only do they incur costs, they also bring in revenue. So this one, so where cost is incurred, but revenue is also derived. All right. So by revenue. So not only where you spend, but you also derive revenue. So where revenue is also derived. All right, so that is that. But better still, we have another one called investment center. Investment center. So this one, it is a revenue center. A revenue center in financial reporting, we call it a cash generating unit, a CGU. All right, cash generating unit. They can generate revenue and also have incur expenditure on their own. But an investment center is a revenue unit, which means it's a revenue center, which means that it has this. Plus, it also has the ability to raise finance. So they also carry out financing responsibility. So they can generate financing responsibilities. So they can generate capital. All right. Even though they spend money, they also get revenue. They can also generate capital. All right. So they have that kind of thing. So possibly they can have financing. They can also let people bring in capital to that place. So that is what we call an investment center. Now you see, we'll be using these terminologies. All right. So so you have to be abreast with them. All right. So take note of that. So these are things that you need to know. What is a cost center? What is a cost unit? What is a revenue center? What is an investment unit? So these are the things that you must understand. So when we talk about the concept of cost, these are things that you must have knowledge about. All right. So that is that. So basically, these are the things of cost that you should take cognizance to. All right. So, and that thing that I've done here, all these things that I've done here, even though it's a terminology, it is also something called cost analysis. All right. Cost analysis. Cost analysis. So it is also very useful. All right. And all these things that you see here are what we call, as part of the things called cost analysis. All right. Take note of that. Now, yes, a cost object, the purpose for which cost is determined. All right. We have cost unit. We have the basic component of a cost object, the basic component of a cost object, or basic component of an object for which cost can be ascertained. All right. So that is that. Then we have a cost center. All right. A department. And this one, I can even open it up small, because when you talk of a department in an entity, when we are talking about cost, you can talk about the production cost center. So you see that for that place, it is all about production. All right. So what you see there is that that is where the actual production of goods takes place, and that, I mean, the manufacturing, assembly, or a factory, the things that that are done in a factory. All right. So all the costs associated with them, you will see it. You can also look at something like a service cost center. All right. So not only is a place for manufacturing. All right. The word center can be spelled this for the British and this for the Americans. All right. So take note of that. All right. So a service center, you see, you have some department, they don't do anything, especially the IT people and the HR people. So annoying. They don't do anything that much. But they are part of the service, maintenance people. All right. You even have admin, don't we? That is what most of us go to school to learn. BSc administration. So where the accountants and also the HR and the other legal departments are, they are also part of those centers. And these days, the latest one that is taking place is the research and development center of an entity. You see them, they are all there. All right. And the marketing and distribution. So the selling and distribution center. All right. So they help you to find customers, they deal with customers and all those things. Everything about customer is about them. All right. So these are things that you should have an idea about all of them. Okay, so cost object, cost unit, cost centers, all right, revenue centers. The revenue centers, you can also call them the profit centers because they have both cost and revenue. So you can take note of that. Then you have the investment sector centers. All right, so that is that. All right. So how many did we have? Like cost object is 1, cost unit 2, cost center 3, cost revenue center, and the investment center, right? So basically that is that. We will later learn something about a cost card, all right? So these are the things about cost that you need to know, all right? So these are things about cost you need to know. So that is the concept of cost for you. And like I said, there is one of them called the cost card. That is a card for which all the costs are accumulated upon. All right. So, and I'll give you a template of a cost card, how it looks like. So, everything costly. So, our total cost. All right. It has the summation of all cost. All right. So, this one is a card or a document that contains the summation of all costs. All right, so basically that is what it is. All right, so now we've seen the first objective, understanding some of the terminologies we will later use in this course. So when I say a cost unit, you don't want me to explain it anymore. When I say a cost center, you don't want me to explain it anymore. So now let's classify cost classification. Cost classification. Cost classification. Anyway, just to run this through. All right, so if you want to join our tuition center, I'm at UIPD, Tema Accountancy Center. All right. This one we do a face-to-face class, and this one is purely online. So why I'm saying this is that I'm also with Prof Training Solutions, but that place I don't do MA. All right, it's purely reporting and audit. All right, so these are the centers you can have these. The reason why I'm saying this is that sometimes if you join our class, you don't need to really write notes because I will share the board here with you. So this will be your note. And once you are watching the video alongside with it, you will see that you will have the notes as well as the video, and you understand why the lines are drawn and everything. All right, so it makes your studies very easier. All right, so now let's do cost classification, and we are going to classify cost under about 5 headings, right? So let's first classify cost according to nature. So we will classify cost by nature. Naturally, what is that? What is that cost? Then we will classify the cost by function. By function. So what do they do? All right. Then again, we will classify it as a product or a period cost. Product or a period cost. We'll classify as such. Then not only that, we will also classify costs as to whether they are controllable or non-controllable. So controllability. So in terms of controllability, so whether it is controllable or uncontrollable. Then lastly, we will classify costs according to what? Their behavior. All right, so let me do 3, 4, 5 by behavior. How they behave with production. All right, so now let's look at classifying costs according to their nature. Now, naturally, a cost can be a material. all right, it can be a material. I mean, the unit of it is a material. So exactly. So what you are using to produce the thing. All right. So the cost associated with raw material. So when we classify cost under material, we are saying that it's a cost associated with what? Raw material. So if we are producing something, what we did to be able to produce, what we used to produce what we were using to produce. All right. So cost can be classified as material. Cost can also be classified under labor. All right. So labor, I mean, the hours one spent, the human element, human time usage. All right. So the human being that is on the thing. Then if it is not a material and it is not labor, then it is expenses. So what are expenses? Anything other than material or what? Labor. All right. So that is that. Anything other than material or labor. All right. So that is how we classify. So by nature, the thing can be material, can be the labor aspect, or it can be what? The expenses. So these are the classification of anything other than what? Anything other than labor and material. All right. That is an expense. All right. Okay. So that is that. Now let's talk about function. By function, we can say that the thing is a production cost or is a non-production cost. So by function, one, it can be a production cost because it's either you are in the factory or you are not in the factory, all right, or non-production or non-production. So you see that some of them are inside the factory, I mean the production, and those ones, i.e., you could see that the raw materials are there, the material costs are there. The labor too are there. Those are who are directly. So you see labor too, they are there. All right. Sometimes the expenses may be there, all right, but the expenses that are not at the production side, we call them overheads. Overheads. All right. So we also spoke about the admin people. They are not at the production center, selling and distribution. They are all not at the production center. They are off the production center. All right. So take note of that. That is something you need to take note of. Then we come to a product or a period cost. So there are some of the things they are for the product. Other things are in the influx of time. They are used in terms of time. All right. So that is that. So when we talk about the product cost, we are talking about those ones that goes into the making or the buying of the product. So the product cost simply means that those ones are for making the product, the cost that you incur in making the product, cost on making or buying the product. So it's either you are making it yourself or you are buying the item. All right. If you fall in that category, it is called product cost. And a typical example of those costs are the three things we mentioned here: the material, the labor, and the expenses. These are product costs. All right. But we talk about some of the costs as period cost. Period. It means time. Period cost. Take, for example, a cost like your salaries, your rent. Okay, so you see that it is for a period. They really do not change, they remain fixed. All right, because as long as you are there, you'll be taking salary. You've been taking salary like that, just like that. So we are talking about costs that do not change for a specific period or costs that are fixed, that are fixed for a period of time. Typical example is your rent. You rent for 1 year, it is like that. your salary for 1 year, it is like that. All right, unless there's an agreed increment. All right, so we will look at those ones. Okay, so that is that. Then we have costs that you can control and costs that you cannot control. You see, the controllable costs are costs that can be controlled by a manager. These are costs that can be controlled by a manager. They can be controlled by a manager. All right, and these are normally direct to your production. All right, so costs that can be controlled by a manager. All right, and they are usually the same things. They can be controlled by the manager. Then we have the uncontrollable ones. They cannot be controlled by a manager. These ones cannot be controlled by the manager. Cannot be controlled by a manager. And these are also just like your period cost. So your rent, you see, raw material, depending on how much I want to produce. If I go and I rent a room. All right. So I rent a room or a building. Okay. I will pay money. Let's say 1,000. It is fixed. I cannot control it any longer. But what I'm using the building for, I can use the building to produce 10 things, or I can use it to produce 5 things. So long as it is towards my production, yeah, you can control it. All right. So that is that. You see, for example, if you take a company, for example, that has accountant salaries and all those things, whether the company make profit or not, you still be paying the accountant a salary as it is. All right. But you see, you can determine how much to produce and how much not to produce. So that is what we mean by what we call controllability and non-controllability. So take note of that. Then lastly, we want to classify costs per their behavior. You see, per their behavior, some of them are direct, some of them are indirect. And in fact, some of them are varying, some of them are fixed. All right, so take note of that. Some of them are varying, some of them are fixed. All right, so we have something called direct and indirect costs. Take note of that, direct and indirect costs. And I will explain it when I'm doing the cost card. I will show it to you when I come back and draw you the template of a cost card. All right, so take note of that. There is direct, so cost can even be classified under direct and indirect, and that you will see it here. You will see it here. So those ones that are direct to the manufacturing, we call them direct costs. All right, and those ones that are not direct to the manufacturing, we call them what? Overheads. All right, so prime cost and overheads. So direct cost and indirect cost. The direct costs are called prime cost. The indirect costs are called what? Overhead. So let's classify costs according to their behavior. How do they behave? How do they behave? So per behavior, we have what we call variable costs. Variable cost. So this one, it changes as your level of activity changes. All right. So these ones, they vary as the level of activity changes. What is level of activity at all? Level of activity means my production. Production. All right. So if I'm producing 10 units, the material that I will use for 10 units will be different from the material that I'll be using for producing 5 units. So level of activity is just our production unit. All right. So that is that. So it varies. It varies. It's not the same. It's not the same. Then we have the fixed one. So here too, you could see that the material, the labor sometimes can vary. All right. Then we have the fixed cost. Fixed cost. Fixed costs do not vary. These ones are constant regardless of the level of production. Constant regardless of production level. or activity level. So take note of that. These ones are fixed. They don't change at all. They are like that regardless of the activity level. But we have semi-variable cost and we have semi-fixed cost. Semi-variable cost. It means that there is a constantness, or there is a level of it being fixed, and at the same time there is a level of it being a variable. So it has that kind of possibility, and so we call them a semi variable cost. Semi-variable cost. All right, so you can have those kind of things. Another terminology that we use for this kind of thing, they are called a step cost. Step cost. Step cost. So you see these kind of cost, what you see there is that it has a mixture of the variability and also the mixture of a fix. Sorry. So that is that. So semi-variable cost, or semi-fixed cost, or semi-variable cost. Now let me even use these terminologies to help you better understand. Sorry. Excuse me. So let's call the semi variable ones something like a mixed cost. Yeah. A mixed one. A mixed cost. And why do we call it a mixed cost? Because it contains both variable and fixed cost. All right, it contains both variable and fixed cost. I'll give you an example of this one now. You know, something like electricity is one of them. When you are using up to a certain unit, you see that it is fixed. Immediately you cross a certain level, it becomes variable. All right, so that is that. The same thing goes for telephone charges, bills. Yeah, it's also like that. But there is also another one that we can call semi-fixed cost. And that one we can call it a step cost. But there is no difference anyway. They have both in them, semi-fixed cost. So whether you call it semi-fixed cost or semi-variable cost, it's not really different. They are all step. All right. So that one too, it is fixed at some point. All right. Then when you get to a certain period, it changes. So whether semi-variable or semi-fixed, whether step cost or mixed cost, they are all the same. Okay, so you have variable, fixed, and a semi. All right. So basically, that is that. Like a factory supervisor, for example, if production is at a certain level, you see that their salary is fixed. But when it gets to another angle, you need to increase it for them. All right. So that is that. Even a factory space like that, those are the things that you need to understand. All right. But let me add one classification anyway. We are not there yet, but let me just add it. I want to call that one relevant and irrelevant cost, right? So relevant and irrelevant cost. Irrelevant cost. It's something that we will do later on, all right, when we are trying to make decisions. All right. So these are costs that makes a difference. Cost, relevant cost makes a difference. If you don't do them, the project will not be there. Without them, there will be no project. So they make a difference in decision making. Cost that makes difference in decision making. You will later learn that in the part of the course that these are opportunity costs. Opportunity costs. They are futuristic in nature. They are future cash flows. All right. They are relevant to decision making. They are incremental. We will learn them later, so no need to worry. All right, so that is that. But when we talk about irrelevant costs, they make no difference to decision. They make no difference to decision making. In fact, my tuition here is relevant one because it can make a difference in your exam. I mean, the marks you can get in the exam. All right, so that is that. That is that. All right, so these are things that we will learn later. All right, so these are irrelevant costs. They are something like a sunk cost. All right, historical cost is irrelevant. We call historical cost sunk cost is irrelevant. All these things of your depreciation. Remember, depreciation is a cost. Depreciation is actually part of fixed cost. All right, it's part of fixed cost, so it is irrelevant. All right, all your amortizations that you do is irrelevant. All right, so they make no difference. So these are the classification of cost. We will pick on with this one, the what do we call it, the behavior one, and find out, and that is what we will learn in the third phase of what we are trying to do, separating cost. Now the thing is fixed, semi, it has both what do we call it, the fixed and the variable in it. So here, semi, the semi fixed cost or semi variable cost. Now how do we separate them? How do we separate them? And before I go and do that mathematical way of separating them, let's quickly look at, why do we need to classify cost? What is the reason? Of what importance is classification of cost? Importance of cost classification. Why is it necessary that we classify costs? Why is it even important that we need to learn something like cost classification? Is it necessary? Why do we need to learn about them? We need to learn about them because we will be determining selling prices. It is useful to determine the selling price of a product. All right, so that you can cover everything and know how much profit that you learn. As a matter of fact, it is useful in decision making, because we just mentioned something like relevant cost and irrelevant cost. So we want to know those ones that will affect the decision that we are making. Can we attribute it to that, or it is irrelevant to our cost? So we really need to know which ones are relevant and which ones are irrelevant. All right. And it is also good that when we know the cost, we can plan. If you remember in our first lecture, we said planning is knowing what to do, when to do, and we learned planning as part of allocating resources. So if we know the cost, we can be able to allocate the resources. And doing that, it is very useful for us in budget. We need to know cost to budget, and it is something we will learn very soon, budgeting. So you know that we will need the cost, all right? And for reporting, of course, financial reporting, everything is done at cost. One of the common things you see about every standard is that we want to know if cost can be measured reliably. So measuring the cost and classifying it is very, very important. And also later on, you will realize that we want to do cost control. If you know the thing is too much, how do we control it? How do we do comparisons so that we can actually make sure we minimize cost? All right, so all these things are importance of cost. Now, going back to the separating of the semis, we are going to learn something called use the high-low method. All right, so that is that. So let's use the high-low method to separate the semi cost. All right, the high-low method to separate all the costs. Because why do we need that? Because I told you that we need to do a cost card. So a cost card will show everything, all right, that went into the cost, the summation of the cost. We will do a cost card so that we can know all the total of the cost. So a cost card we do it for a cost object or a cost unit or a cost center by bringing in all those costs together. So cost card starts with, so you can say a cost card for a product. So, and you can name the product, let's say product A. So what would be the cost card of that product? So we start with our direct cost. So direct material, those ones that are direct to the production. So let me put a CD sign here. You have direct labor. Then we have direct expenses. All right. A typical example of direct expenses is when wages is standing on its own. Wages. Wages is a direct cost, not salaries, wages. All right. The difference between a wage and a salary is that wage is daily or weekly, salary is monthly. So the wage is what you get that day. In Ghana, I think it's easy for us to understand. We call it by day, by day. So if a mason comes to work in your field, when he's going, you pay him. So it's by day. Another example too is royalties. All right. So take note of that. All right. So you get all these direct, you put them together. I said the total of this thing is called what? Do you remember? Yeah, you are right. Prime cost. Prime cost. So you have your prime cost. Now, when you have your prime cost, you now need to add your variable cost. All right. So variable cost. So you add your variable production overheads. Variable production overheads. These are not direct, but they are also part of production. All right. Overheads are indirect, but they are also part of production. So you add them. All right. So when you add this one, you see that I told you that you can be varying these things too. Yeah. So it's varying, but it's direct. All right. So that is that. When you put it together, you will have what we call variable cost of production. Variable cost of production. So prime cost plus variable overhead gives you your total variable cost of production. So that is what you get. Now you are coming to add the fixed production overhead. Those ones are not variable. They are not variable. So you add fixed production overheads. They are fixed. Fixed production overhead. That tells you that with what I've done, it simply means you do prime cost and you add overheads, but the overhead, it has to be split into two. All right. You have to split it into two. And so you have variable production overhead and fixed production overhead. Now, when you add all these costs together, you now get the total production cost. Total production cost. Everything that went into production. Total production cost. Total production cost. Of course, you have non-production costs like the selling and distribution. So you can add all your non-production costs. All right, like S&D, selling and distribution, administrative expenses. All right, research and development sometimes. All right, these are not production. They are things prior to or after production. So when you get those things, you add it up. Then you get the total cost of the unit. So this is the very total cost of a unit. Not production, no. Total cost of a unit. So that's how a cost card looks like. And it is something that we'll be learning how to do. So take note of that. All right. So that is that. So we now want to get back to how we will separate the cost, all right, the semi ones. All right. So how do we separate it? So our objective 3 for today is separating cost. separating a semi or a semi-variable cost or semi-fixed cost. So let me call it separating a semi-cost, or let me say semi-fixed cost or semi-variable cost. And I said that the approach we are going to use here is the high-low approach. One is the high-low method. High-low method. High-low method is a very simple method. It's a very, very simple method that we want to learn. And so how do we apply the high-low method? Because we will be solving some examples and a past question so that you have a feel about that. So in doing the high-low method, what you need to do is that you have to find out the highest level of activity. So let's learn the steps. So steps in doing high-low method. Step one, just find the level of activity. So find the highest level of the activity with their cost and find the low level of activity with their cost. So that is that. So find the highest level. Let me say, find the or select the highest level of activity. Select the highest level of activity. And I've explained level of activity, right? Production units. All right. So when you find the highest level of activity, also find alongside its cost. All right. So you have to find alongside its cost, not just the level of activity. So find out the cost of that highest level of activity. All right. And they are so find their cost too. So their cost, associated cost, which will be given to you. Not only that, also do for the the lowest level of activity and its associated cost as well. So that is the step one. It's not difficult. So you just pick it out of a question, then you do that. Now, when you do that, step two, what you do is to calculate the variable cost per unit. You need to do that. Why? Because a total cost, when we want to find a total cost, you saw what I did. There was fixed cost and there was variable cost. But variable cost vary with the level of activity. You just saw the cost card that I did, right? This is it. So there is a fixed cost part. Fixed cost part, that one is constant. And we have the part that is not fixed. It varies. So this basically is the cost. So we have the variable part and we have what? The fixed cost. So it means that if you want to know the total production cost, all right, of a unit, it means you need to have a varying part and you need to have non-varying part. So take note of that. So that is that. Even these ones too can be fixed or varying depending on how it is. All right. So it means that a total cost. All right. Let me shift this here. A total cost is equal to the total fixed cost plus variable cost per unit multiplied by the level of activity. We can get the total cost. That's how we can find the cost. So as for total fixed cost, it is fixed. So the next thing we do in our step two is to actually calculate the variable cost per unit. So step two, calculate the variable cost per unit. Variable cost per unit. And how do we calculate variable cost per unit? This is how we do it. Variable cost per unit, that is why you selected this, is equal to the cost of the highest level. So cost at highest level, this one. The ones you found here. Cost at highest level. Highest level. Minus cost at lowest level. all over. So you have used this side. So let's come to this side. All over the highest level of activity. Highest activity level. What do you think we will minus? Good. Lowest activity level. Don't forget, I've told you that the activity level is just the production. All right. All right. So that is that. So you go through and you will do that. Okay. So once you are able to find the variable cost per unit, which you found, this one, you can multiply it by any of the level of activities. So you can pick the highest one. I advise that you use the highest one all the time because the highest one is the first one, but you can also use the lower one. So you do that. And when you found this and you already have this, finding this will not be a problem. So what you do is that you use change of subject. So you will calculate the fixed cost using change of subject. Calculate the total fixed cost by using change of subject. And by the change of subject, you will see that if this one is to go to the other side, it will be minus. So it means total fixed cost will be equal to total cost minus into bracket variable cost per unit. All right, VC per unit multiplied by the level of activity, which you have done anyway. You use highest activity or the lowest activity to do that. All right, so take notes of that. Just a second. All right, that was actually a call from someone who is buying a book. So you see, so that is that. You can also get yours. Then now that you have been able to ascertain the fixed cost using the highest level of the activity, your step 4 is to also use your step 2. So what you can do is that you can calculate the final level, which is your total cost at any of the levels. All right. So substitute into the equation to determine the variable costs and the fixed cost at any level. At any level. All right. So once you learn something like this, the best thing to do is to put it into practice. So we are going to practice it right now with questions. All right. So we go to the manual and we take illustrative questions. All right. So that is that, and we practice it. Now, these are the illustration, and this is the level of the activity and the total cost. And we have been asked to calculate the variable cost and find out the fixed cost and estimate the total cost if 3,500 units is produced, and also do same thing if, let's say, 6,000 units is produced. All right. So we need to find the breakdown. We said that step 1, we should find what the highest level of activity and the lowest level of activity with their various associated costs. So this one, which one is the highest level? I think this is the highest level, and this one is the lowest level. So I have ascertained that. So the highest level is 4,000 units, and its associated cost is 90,000 cedis. The lowest, what I have is 2,000 units. Its associated cost is 70,000. Step 2, what did we say we do in step 2? We calculate the variable cost per unit, right? And how did we say you do the variable cost per unit? You would take, what do you remember? The prices at the top, all right? So the cost at the top. So here will be 90,000, the highest level, minus the lowest level, which is 70,000, all over the highest activity, which is 4,000, minus the lowest activity, which is 2,000. So basically, this is what we do. And when you do this correctly, of course, this is 20,000. and this is 2,000. So you realize that you have 10 cedis per unit. So that is how you find it. All right, that is all. Step 3, what did we say? That you slot it using one of them, all right, to find your cost. Basically, that is that. Using one of them. So if we want to use one of them, and I said that you can use the highest one in terms of the cost. So step 3, what will be it? Because we say that the total cost. Don't forget, we said total cost is equal to what? Fixed cost plus variable cost per unit multiplied by level of activity. This is what we said. So now I need to use one of them. So if I say I'm using the highest level, you can use the lowest if you want to. All right. My total cost is 90,000. The fixed cost is something I don't know. Plus, I know the variable cost per unit, which is 10 now. And what is the level of activity? The level of activity there for the highest level is what? 4,000. So that is it. So it means I have 90,000 equals X plus this thing is like 40,000. Is that not it? So X definitely, if I change to this place minus 40, all right, it will be what? 50,000. So X is 50. So it will be 90 minus 4,000, 40,000. So X is 50,000. That means that my fixed cost is what? 50,000. That is it. So if I want to do step 4, now I know my fixed cost. All right, I know my fixed cost. And if I want to use it for the lowest level too, I can use it for the lowest level and I can get my figure. All right, so basically that is it. All right, so if you put the total cost for the what we call the lowest level, which is 70,000, you know your this thing is fixed. So see something, let's practice something small. 70,000 will be equal to 50,000. It is fixed regardless of the level. It is fixed. Plus, and we know variable cost per unit is 10, and the level of activity is what? 20. What is that? 2,000. All right. So if you multiply this, it's 20,000 plus this, you will get this. So whichever one that you use, you can use to substitute the other. So really nothing different. All right. So we found our uh, uh, our fixed cost, and that is it. And we also find our variable cost per unit, which was 10. So A and B is done. Now the question is asking us to do same if the output is calculate the total cost if output is 3,500. It doesn't matter. Our fixed cost is always fixed. So if output is we are supposed to find total cost. We know fixed cost is always fixed. So total cost will be equal to fixed cost is always fixed, regardless of the level of activity. And we know variable cost is 10, and you're saying that we are producing what? 3,500. I mean, it's as simple as that. So you clearly see that 50,000 plus 35,000, 85,000. Do the same thing for this one. Fixed cost is fixed. 10 by 6,000. You are having around 110. All right. So basically, that is that. Is it difficult? High-low method is cheap, right? Very, very easy. All right. Then we come to another example, which I expect you to be able to do. All right. So these are everything. So A, say use high-low method to analyze the total cost into fixed cost and what? Variable cost component. So if you pick this, let's ascertain the highest and the lowest. Which one is the highest? Which one is the highest? So it looks as if this thing is arranged already in order. If it is not, be careful. Find. So my highest level of activity and cost, highest is 500, cost is 7,310. But which one is the lowest? Lowest is 260 and its associated cost is 6,566. So what will be the variable cost per unit? You use the cost at the top. So it's cost per unit. So unit is down, right? So never be confused. 10 minus 6566 all over 500 minus 260. All right. So if you do this, we know that the down 260 will give us a 240, right? So 3710 minus 6566 is 744, and we know that the down one is 240. So divided by 240, I have 3.1 per unit. So 3.1 cedis per unit, variable cost per unit. So given that, I can find my fixed cost, all right? Because if I pick, so that would be my step 3. If I use the highest, total cost is what? 7310 will be equal to the fixed cost I don't know, plus the variable cost, which I have level of activity of 500, multiplied by cost per unit of 3.1. All right, so 3.1 by 500, that gives me 1550 plus x 7310. So 7310 minus the answer that I had, x is therefore equal to 5760. So it means fixed cost is 5760. Now that I know fixed cost to be 5760, I can know my variable cost at ease. Or variable cost is even here. So you can actually do that, and that will be all. Total variable cost, that will be all. So basically, that is that. You can do that. Now, it says that we should now analyze this. So what we just did, this is the final answer. All right. Now, it says that B, when output is 80 or more, another factory unit must be rented, and the fixed cost will increase by 100%. Now, watch it. If our fixed cost is to increase by 100%, it means we are multiplying it by 2. 100%. Take note of that. What you have now, you need to increase it by 8 again. So times 2 gives me 11,520. So that is my fixed cost. And it says that variable cost per unit 2 is forecast to rise by 10%. What was the variable cost per unit? It was 3.1. So 3.1 multiplied by 1.1. That is raised to the power 1. That is it. So it's 10%. So it's 1.1. You can also do 10% of the 3.1 and come and add it back. It's the same thing. All right. So 3.1 multiplied by 1.1, I'm increasing it. That gives me 3.41. All right. So, and that is what, so it says that we are required to calculate the cost of producing 1,000 units. All right. If that is the case for the B part, it means that my total cost will be fixed cost, which has increased by 100%, which is 11,520. And my variable cost, which has also increased by, don't forget, fixed cost, we are not interested in your level of activity. So here will be 1,000 units multiplied by 3.41. All right. So that is that. And multiplied by 1,000, that is 3410. And this will give me, that is 14,91930. So basically, that is that. So we just follow the instruction, and that is what we have ended up with. Now, this is your trial question. You are going to do it. And the answer clue is that you must have this answer. So try it at wherever you are. Put the answer in the comment box, the answer you had. Even if you didn't get this answer, put it there. I'll get the feedback and we will work it when we are doing lecture 3, just to find out that you had it correct. But if I realize that everybody has it correct, then it means there will be no need. All right. So the advantage of the high-low method, what have you learned, is that it is easy to understand, right? And it needs just 2 levels of activities, highest and the lowest one. Where visually, it gives a general direction of a trend, all right? So that is that. But the disadvantage is that it considers only 2 extremes of, that means that the data is a normal distributed one. But what if it is a scattered one? What will happen? All right. And it is just based on 2 points. So formula is not very accurate because it doesn't consider the middle ones. And last thing is that it is based on something that is historical. Historical means it is irrelevant, right? We said that. All right. So that is that. Now we can use this thing that we have done to generate an equation. So let's talk about the cost equation. Cost equation. All right. Let's talk about the cost equation. It's a very simple analogy. Now, if you look at what we did, we can say y is equal to an intercept A plus a bx. All right. You can use anything, but y will be our total cost. Don't forget, and it is the dependent variable. That is the dependent variable. What is A? A will be our fixed cost, and it is the intercept. The intercept. What will be B? You remember, B will be the variable cost per unit, as we did. All right, so look at it. So it will be the level of activity. All right, multiplied by the level of activity. So B is the gradient. Let's call it the gradient. All right, the slope. The slope, which is like this. So it has a higher point, it has a lower point. Then the X is the level of activity, which of course is an independent variable. Independent variable. All right. So with the formula, what we did, like something like this, it can be said that 1430 is equal to fixed cost of 11,520 plus into bracket variable cost per unit was 3.41 multiplied by level of activity 1,000. So basically that is that. So you can use an equation to represent this. All right. So that is that. Graphically, this is what you can see as the graph. All right. So basically that is that. All right. So if you have the equation like this, then that is the meaning. All right. So we have a past question here. May 2019, management accounting. Not even an introduction. Management accounting, which is a high-low principle, and we need to go through to do that. So how are we going to do it? So the same principle. All right. So the highest level of activity, lowest level of activity. If you look at I told you activity is production levels. So don't get confused. All right. So Komosa is reviewing the selling price. And I told you we do cost classification for determination of selling prices. And a forecast of annual cost has been done. So you have the level of activity, which is the annual production, 100,000, 160, 200,000. And you have these ones, which means total cost. That is total cost. So take note of that. So cost is what you see there for each level of, so these are the total costs. So for example, if you want to, you can find out, you can see that we said cost is what? The prime cost and the overheads. So you have just that there is no fixed cost yet. All right, probably the reason why we need to do this. It says that the cost behavior represented in the above forecast for the whole range of product up to 300,000 units of this product. Calculate the total variable cost per unit and the total fixed overhead. Fixed overhead. B or I calculate the total cost. State the total cost function. What we just did, the equation 1. All right. So that is that. So we see clearly that we are supposed to do overhead, total fixed overhead. So it means it's not total cost. Be very careful. Overhead, fixed overhead, because we have variable overhead and we have fixed overhead. You saw it in the cost card. So it means this question, our focus is not on total cost. Our focus is on only overhead. So take good note of that. The examiner is always tricky. All right. So if I'm doing about the overheads, my activity level, what is the highest? and what is the associated cost. The highest I can see is 200,000 level of activity. And the associated cost of that 2,000 is 1.4. Don't forget there are 3 zeros here. All right. So if I want to shrub the zeros, then I can also say that I can put zeros here and say 200 and 1460. All right. So take note of that. That is what I can do. So if you check the activity, the activity is 200. The overhead that is there is straightforward. So there is no need to even cause a wahala. That is what you see is just that, straightforward. Then you have the lowest. So which one do you think is the lowest in this case? So you can actually say that these are what you have. But when it comes to the variable part, this is it. So if you want to find your total cost, for example, you know that this is material. You can pick total 200,000 divided by this, you get the material aspect. We will do that shortly. All right. Don't worry. We will do that shortly. But this thing you are doing is for overhead. So lowest is 100, and it is for the overhead. Overhead. So don't go and pick 200. No. Overhead. So it is 880. All right. So that is that. If we want to know the total variable cost per unit, do you remember what we did? Go to the cost card. Let me take you there. This is total variable cost per unit. But we have been doing variable cost per unit. All right. So TVC is the same thing. But I just want you to look at something here. All right. So you saw this total variable cost of production. You needed these things, prime cost, and you added your variable production cost. So you can see clearly that this is where your variable production cost is, because this is the annual production, and this is where your variable production cost may fall under. So if you are solving a question like this, don't forget. So the question says it wants per unit. Per unit. So that means that I need material per unit. So probably I should solve this question here. Direct material cost per unit. How much will it be? So DM per unit will be equal to, this is the cost of direct material, and this is it. So it will be 200. Don't forget, everything is in over 100, which means that the direct material cost is 2. So here is 2. All right. Direct labor, what is that? 600 divided by 100. So that will give me 6. So 6 cedis per unit. So this one too is 2. Sorry, 6. The expenses, we don't have anything like expenses in this question, but we need to now find this one, the overheads. And the overhead, you see the overhead, as you see here, we have fixed production overhead and we have variable production overhead. The question didn't give us the breakdown. That is why we are doing separating it. All right. So we have 6 and 2 already. So if I am separating it, I am using high-low method. So that is what we are doing. High-low method. So if you come back to probably what we were doing here, what will it be? It will be 1460 minus 880 divided by 200 minus 100. Of course, here will be 100. So what about this? So I have 1460 minus 880. What I have here is 580, meaning that the variable overhead per unit, variable cost per unit of the overhead is 5.8 cedis per unit. So don't forget, we had 2, so it means the variable aspect is 5.8. And if I go and put the 5.8 to what I did, so let me not go there. We have DM to be what? 2, DL to be 6. So variable costs or variable overheads. All right, overheads per unit. So let me write it well. per unit, 5.8. So put together 8, 5, 13.8. So I've answered the first part, total variable cost per unit. So you saw it in the cost template. But what about the fixed cost? Of course, when we use this high-low, you can get your fixed cost easily. How do we do that? We said total fixed cost, total cost is given by the total fixed cost multiplied by plus into bracket variable cost per unit multiplied by activity level. And you can use any of the activity levels. Say you are using the highest level or you are using the lowest level. It's still the same. So there is no need for you to worry. All right. So how would you think it will be? Because what you get here is a symbolism of your, what do we call it? Your cost equation. So that is that. So basically that is it. So since you found it, what will be your fixed cost? What will be your variable cost or anything? Because the total cost will be given by, so you had this, so let's say 1460, and don't forget everything that I'm doing. So these were your costs, total fixed overhead. Don't forget everything we are doing is overhead. So this was the highest one. You can pick the highest one and say that it is equal to X, which you don't know, right? And when you do plus, the per unit is 5.8, and the highest level of activity was probably 2. You can also use the lowest level. I keep saying that it's not by force. So if I do 5.8 multiplied by 200, here is 1160 x 1460. So 1460 minus 1160 will be equal to X, and that is like 300 cedis, right? So if that is the case, I can now do my total cost function. So the function will be equal to Y is equal to A, and A here is 300,000. Don't forget there were 0 zeros at the top. Multiply plus the total variable cost that we did. So if you check the equation, the total variable cost. So what was the variable cost per unit? The gradient, the total variable cost per unit, and the total variable cost per unit. So let me write here, not just the variable cost, but the total variable cost per unit. All right. So the total variable cost per unit we had was somewhere, this is it, 13. So don't go and put 5.8. We are looking at everything in total variable cost. This is just the variable overhead, and there are other ones attached to it. So that one will be 13x. What is x? X is the level of activity. So if you give me the level of activity, let's say level of activity 300, I can represent it by x and get you the value. So that is the function. You do this, you get 5 marks. Quick Proco. So let's look at the solution here. All right. So A is 3.8, 13.8. I forgot to add the 8. All right. So that is that. So basically that is that. The next thing we need to go out there and do is to do the last aspect, which is cost coding. Point 4, cost coding. We need to learn how to code cost. And this one, it is useful for your offices. You need to actually be able to code your cost. Those of you who work in industries where you have to actually keep proper filing, cost coding is for you. So it's a systematic way by assigning code to the cost element. All right. So that is that. And that is just what it is. Assigning code to the cost element so that when you put it in your files, it will be easily for you to trace it. All right. And it has to be unique. It has to be simple. It's like password. All right. Password. Why do you keep password? All right. You assign password to activity so that it can give it a clear identity, classify it, and analyze it. So in your filing, people put file I have filing in my home, so you can see this portion is for ICA professional. All right, this is you see financial reporting, audit, and everything that is there. ICAG. That makes me a chartered accountant. So all these books are for GAP, IGAP, like update on the standards. Okay. Then when you come to this section of my library, this is for tax, because I'm also a chartered tax practitioner, and I consult on tax for people. So you see this side. All right. So that is that. Then when you come to this side of the library, you see it is all about wisdom books, Christian books. So books on relationships are here, books on wisdom, like you see them. All right, books from Mensa Otabel, books from what do you call him? Bishop Dag is here, Joyce Meyer is here, Miles Monroe. Yes, I read a lot, and this uh, uh, Stephen Covey, very very good author of the 7 Habits of Highly Effective People. Everybody must get that book and read. And you have books from Malcolm Gladwell. Yeah, The Outliers. Malcolm Gladwell. Yeah, in fact, get the book The Outliers and What the Dog Saw. All right, and get those books too. So it's a code. So if I enter, I can see where Mensa Otabel's books and so many authors. All right, T.D. Jakes, Joyce Meyer, and all those things, all those people. So it's just a coding. All right. So that is that. It must be simple. It must also be flexible and scalable. All right. I mean, you must be able to accommodate, and be consistent. All right. So code it well and be consistent with the code. Don't change, it shouldn't be too much, even though it should be flexible. All right. It shouldn't be too much, because you must be flexible, because business are not constant. It grows. Okay, so art is growing, you also must grow towards that. It must be relevant, easy to maintain, compatibility to your software system. That we have types of code, numeric code. So you say from 100 is direct. Go and look at every company's chart of account. There is a code to it. That is that. So you can say 100 is for direct material, 200 direct labor. All right, so you can use numerics. Then you can also use alphanumerics, where you bring letters plus numbers. All right. So like something like this, combination of letters and numbers. All right. Then you can also use mnemonics. So instead of raw material, use raw. Labor, you use lab. All right. Abbreviation. When we say mnemonics, we are talking about abbreviation. So ADME and all those things. You can also use hierarchy. So hierarchical coding. So that is that. So you do, if it is 100, you do 1001, to show something. So here, what you are doing is that you are using a structured way of layers. Okay, so that is that. 210 1, 210 2, 210 3. Like you see this thing, we call it hierarchy. All right, so that is that. Then the hybrid, you can combine any other thing. Elements, can combine elements of numerics, alphanumerics, mnemonics, hierarchical, all those things you can combine. Then we have the block one. This is what we use in accounting. So yes, accounting. 00 means expenses, and 1,000 from, so 1001 is a revenue item, like let's say sales. Another 1002 will be another one. So let's say 1001 is cash sales, 1002 is credit sales. All right, like that. So that is what you go. Then we have the faceted ones. All right. So you see region, Europe, and everything. So it is also done in blocks. All right. So that is that. So you see these ones. You don't need to really worry yourself about these things, because every company has its own way of doing it. But it is important. So what you need to know is the importance of coding and the features of a good coding system. It's for cost control. It's for budgeting and forecasting. All right. So that you'll be able to track your expense budget. All right. So that you can get detailed financial information to be able to do budgeting. So we can also use it for performance evaluation, because we can bring out the cost from its financial data. And as we are making decisions, we can see how things are going. We can appraise ourselves. Improve reporting. This is very important, especially when there is audit. If you don't file well, go and bring me this invoice. It will take you 1,000 years. You'll not find it. That is what I'm talking about. compliance, and auditing. So, ladies and gentlemen, this is it. You have additional past questions like identify and explain features of a good coding system. We just went through it. Differences between the following used in direct, indirect, we explained. Fixed, variable, controllable, non-controllable. We've not done this one yet. All right. Okay. Then production and non-production cost. You see that characteristics of a service are intangible. You know that. It cannot be touched. All right. It cannot be seen. You know all these things. So imagine you sat in a paper, November 2020, Introduction to Man Accounting, and you were asked to just do this and also do this for 20 marks. Easy. Level 1. The same thing, repeated. Past questions, repeated. November. IMA. Now, look at this. You need to do high-low method. Very easy. Calculate the profit making of twin desk. All right. If selling price is this, advantages and disadvantages of high-low method. Identify 5 important reasons for classifying costs. Do you remember I told you the reason for classification of costs? We did that. Profit center, investment center. You see, this is the only place you can have this tuition to pass your exam. I can guarantee you that. So, and the solutions are the high-low method. Calculate the variable cost and the fixed cost. So which one is high, which one is low? So be careful. This is the highest one. You see where it is? So you pick this one and you pick this one. Which one is the lowest one? You pick this one and you pick this one. Calculate the variable cost. So finish it and use the cost function. And they said that estimate the total cost if it is 7,500. Fixed cost that you will get will be the same. And the variable cost you will multiply with the variable cost per unit to this one. The same thing we did. 9 marks. All right. So basically that is that. And I think there's a similar one here. All right. Establish the total function using high-low method. So you need to, the quantity is here. This is it. All right. Then what do you have? This is revenue and this is profit. So what will be cost? Can you think now? What will be the total cost? If this is the total revenue, I'm guiding you, and this is your profit. We said that when you pick the activity level, also pick what? The associated cost. But you don't have the associated cost. You have revenue and you have profit. How do you get profit? Is it not revenue minus cost? So get the cost column done. Then pick the thing to do the high-low method. All right. I've answered the question for you. When you finish, calculate the profit making of 3,000 units of this if the selling price is this. All right. So if you can get the cost, you multiply it and you also have the selling price. So you can get the profit. The rest is high-low method advantages. So if you check the solution, you see that I've shown you how you get the cost. I just did the first one for you, but you should be able to understand the others. Is that okay? You should be able to get the others. All right. So when you're able to get the others, you do it, you get your function and you go. As for the theory, you refer to the notes, and this is it. So get this book, all right? It is good for your introduction. It is good, and it's just going for, you see, it's a very big book, all right? People are already, and I'm like I told you, somebody called me for his. So, ladies and gentlemen, this is it. It will help your introduction, it will help your man accounting, performance management. If you are in a university student, you can get it, all right? If you are registered in my class, I reduce it to like 300 cedis for you. But if you are not, it's 350, right? So it has all the past questions under the various headings. All right. So basically, that is that. But that 350 that I'm talking about, the 300 discount is just spanned for only from now to February ending. After that, everybody will be buying it at 350. So look sharp, right? Be fast. So when we meet at chapter 3, this is what we will be doing. All right. So we'll pick them one by one. Accounting for the cost element. Have a great day.